What is going on, everyone? Welcome back to another video. Another day, another dollar. We're going to be breaking down the futures contract per usual. Not going to discuss any more trades on this channel. I think that's something I'm going to do moving forward. I think this is just going to be strictly me doing my homework. So hopefully you guys stick around for the technical analysis on my 30-minute time frame, the daily, weekly, and monthly time frames whenever I do those. But we'll primarily just be breaking down the 30-minute time frames. We'll not be discussing any more trades. I just think that'll help me more mentally, not put any pressure on myself to try to make any good trades or bad trades or just trades in general that I should not be taking moving forward. For those of you that have been following the channel, know that I've been struggling over the last several days, especially in this very choppy environment that we are in. As you can see here on our 30-minute time frame, we are in a whole lot of chop. Like a whole lot of chop. It's been quite some time since we've seen consolidation like this, and it's showing. It's showing. For those of us that, or for those that do support and resistance, basically you got, we're in a balance, right? We're in a several day balance, multi-day balance from 44.75. 44.75 all the way up to 46.0775. So a pretty decent range, but we've just been chopping around. Today resulted in a very slow grind session. Very, very light volume, inside day, inside value, worst of your risk reward. In yesterday's video, I discussed how sellers wanted to open below 64.50. We did not do that. We opened and traded inside of the middle distribution, and then for a good portion of the morning, and there was decent range in the morning, and then we kind of just tightened that up as we got into the upper distribution from the triple distribution that we had triple distribution day down that we had yesterday. So we finally began to find some acceptance above 87, and basically each time we came down there, we found buyers. And I think that's just mostly due to everybody that shorted down here at the lows. If they didn't cover at the open, they definitely were covering on each one of these pullbacks while we were in this upper distribution here, right? So another way to look at that is support, right? Buyers came in, or shorts rather came in that market there, and then sellers stepped up their game up here, right? Kind of holding the market back, but not quite enough. And then obviously it was enough for the buyers to step in around 87, basically where the lower portion of that upper distribution was from yesterday. So not a whole lot to discuss. We end up with just basically the high, the low, or the high, the low, and a 11 wide point of control, which means there's 11 time frames out of 13 30-minute time frames in the day that traded back and forth through this 87.25 level. Very, very, very comfortable for the sellers and the buyers to both be here, right? Sellers faded the extreme and edge to come back into it. Buyers bought to rotate up. So we're just in the larger picture, this is what's going on, right? You've got support at the balance low, and then you've got resistance at the balance high, right? If that's how people look at this market sometimes, I'm not someone that views it in that sense. I used to, but I don't anymore. And you could, easily, and you wouldn't be wrong to have your chart look like this, right? There's nothing wrong with your chart looking like this. Knowing that, okay, I don't want to be long from 97.50 to 07.75, right? From 46.07.75. I don't want to be long in that range, right? Because we have failed several times up there to move higher. Same thing down here. I don't want to be short at the low here because market has proven each time we've gotten near this level so far, especially over the last 3 or 4 days, we've gotten near it. We've bounced up. It's been acting as some type of support. So we are in a balanced market right now, which is terrible risk reward, terrible trades, makes it more difficult to read and rely on market generated information. A lot of two-way auctioning, right? So you got sell side, buy side, two-way auction. That's how this market is trading at the moment. And that makes it very, very difficult. Wrong destinations, wrong thing. Okay, here we are. So here is all of our destinations that we marked in yesterday's session. You can see we clearly opened above that price probe, never got near the previous day's low. These, because we open above single prints, they immediately get filled. It's no longer an area to rely on for a sell side. However, it is good to note where those distributions were. So for the instance, lower distribution started at 61, right? The middle distribution started, the bottom portion 64.50, the upper portion of it 84.50, right? And then the upper distribution, the lower portion was 87, which is where those single prints filled. And then the upper portion of that was 97.50, which was the high of day from yesterday. That was the upper distribution, right? That's why it's good to know where these distributions are, so you can kind of see and rely on, just kind of what the market's trying to tell you. Were they finding acceptance? If they were, then you were most likely going to at least test 97.50. And it looked like we did that very, very close here. We got up to 96, so about 1.5 points away from it. So valiant attempt by the buyers here. Sellers just have not been able to get anything going here on the downside. So it'll be very interesting how we close out tomorrow. We'll see if this market wants to come out of balance prior to the Fed next week. It will be very interesting. We have non-farm payrolls tomorrow, which is a number that shouldn't matter, but probably will to those that trade, the events like that. 11 wide here at 97 or 87, excuse me. So, if we close out tomorrow still within this range, it will be both daily in balance, and then the market will have gone from up to balance because it will be an inside week. Okay. We'll look at that here just briefly in a second. Let me mark this point of control and the high of day. It's always good to know these references, as it, use them as targets, not necessarily something to lean against, right? Because we are in a balanced market, so leaning against a previous day's low is not as strong as if we were one time framing up in the market and we got near a previous day's low, right? Same thing for the upside. There's no sense in trying to lean on, maybe more so the short up here against that 97 level, because you're only risking a couple more points to the upside. Well, not a couple, 10 points to the upside, because you were near a balance high once again. So remember the rules when it comes to balance, right? You either get near a balance high and roll over, or near a balance low and, rotate the opposite direction. You push through it and stretch it like we did here back on the first, right? Our original balance was 97. We stretched it to 46.07, came back into balance, right? So that was an example of stretching the balance. And then or the third rule is you push through a balance high or low and don't look back. So there you have it. 96 high of day, 11 wide point of control at 87, low of day 69.75. If you open below the 11 wide point of control at 87, you will go test 69.75. If we do not get much below that, you'll look to rotate up to 87, and then ultimately the high of day at 96. If you open above 87, buyers look to hold that and take out the high day at 96, 97, get that 9 wide point of control at 98 that we missed in yesterday's session. We missed that by about 1.5 points, by 2 ticks. And today we missed it by 2 points. So at some point, that point of control up there will be gotten. Right now, this whole range, like I said, from 97.50 to 46.07 is acting as a resistance area, and that is where we had a 9 wide point of control, right? So it's also a reason to know areas like that. Not only is that acting as resistance, but we have a point of control there where there were a lot of buyers and sellers, a lot of volume done in that time on that day, right? You can see that here. A lot of volume was done there. So all that volume still holding this market down, not allowing it to push through easily. Quickly on the daily and the weekly, We'll look at those both just to kind of get a reference. Monthly still in a balance. Nothing's changed on that. The weekly still one time framing up until we take out a previous time frame's low. So if we take out last week's low at 44.75, once again, the daily goes down because that is our balance, right? So if I pull up our daily balance, you can see how the weekly is, it's all of the daily balance is all of last week's range. Okay. So we're going to come out of this one way or the other. Some steam is going to be let out of the pot at some point. It's just a matter of where, when, and how. So it's going to happen at some point. Right now, it's an inside week. Could come into the daily, or not the daily. The weekly could come into a balance. Right now, you can say that it is up to balance if we close out with an inside week. And then obviously, we look to come out of an inside week to either the upside or the downside. And it would not be bad for the market to have a little bit of a pullback and consolidate on the weekly time frame prior to trying to get a move in the larger picture on the monthly, right? You want to see buyers step into the market here and continue to push this market up. We need fresh buyers because these up here are getting a little bit tired as volume has decreased. Okay, so that is your weekly in a nutshell. Daily. Crazy how quick this 20-day moving average is creeping up, but that's because we've done a lot of volume and a lot of consolidation up here. Okay, a lot of volume, a lot of consolidation up here, just chopping around inside of this range. So we're going to look to come out of this inside day, either to the upside or to the downside and relieve some steam. Our 20-day moving average is right at the balance low. Okay, so that would not surprise me if somehow, some way we take that balance low out, put the weekly back into a balance come tomorrow, or Monday next week, put the weekly back into a balance at some point in time, get below the 20-day moving average, and start to make our way towards the gaps below. Remember, we do have several gaps, a lot of poor structure that needs to be seen. So that's basically all I have for you guys. I hope you all have a wonderful day. We'll catch you guys in the next one. See ya.